Good morning, world. It is Friday, February 9th, 2024. I am Mark Sebastian. I am joined by Alicia J. Leslie, the queen of the candlesticks.
Good morning.
This is Option Pit Live. Good morning. So, is it the S&P 500 or is it the S&P 5000? That is the question. And Alicia, we just had a piece of economic data hit, one that I normally don't pay attention to, and it was the revisions to CPI. But the CPI was revised lower from pretty significantly. And on that, S&P 500 futures absolutely popped. If we open now, we would be trading about 5,015. On February 8th, that yesterday, Thursday, the S&P at the end of the day kind of kissed 5,000. Today, it looks like it's a full-on break. Now, the question is, one, does it hold? And then two, what happens if it does hold? So, Alicia, what's your reaction to this really strong run up to start the beginning of the year?
First of all, from what I understand, the revisions have been pretty revised.
Yes.
From
Yes,
what
they
I'm
have.
reading, a lot of the revisions are major league changes. So I think revisions are almost as important as the numbers now. But also the run up here, let me show you this on the weekly. We are up 14 of the last 15 weeks.
Oh my.
And that hasn't happened since late 71 into 1972. So kind of
Oh
the
wow.
same time frame, December to Jan or November to Feb, I think it was. So that's pretty crazy. Not
Yeah,
sure.
that predates us. That's how long ago that was.
Well, I was little, but in fact, my mom pulled out a little merit certificate from my first grade. I'm like, Mom, you saved this from first grade. Okay, anyway, so is this a pattern that's bullish, sustainable, or is it,
It's violent.
yes.
The part that continues to get me nervous is that we're making these new all-time highs, and VIX is holding pretty firm. And it's not like realized volatility has been like insane. So realized volatility. So there's two types of volatility. Implied volatility is what the VIX reads, and that is the price of options. And then realized volatility is how much the market is actually moving. And in the last 20 days, realized volatility has been about 10.8%. So not disgustingly low, but relatively low. And we're making new all-time highs. We haven't had a down week in 14 weeks. And the VIX is not making new lows. I mean, here's that run up. Here's that look at volatility. And, the VIX bottomed out in December. How much are we up since December 13th when the VIX bottomed out? Well, on the night of December 12th, we closed 46.43. So we're up about 350 points, and volatility is higher than where it was 350 points ago. That kind of says that there's something amiss here to me. So that's it's the other piece that I think is really throwing people off is that this rally, and I know we're beating a dead horse. Like this is kind of the topic du jour, but the narrowness of the rally, the market has really been driven by only a few names. So this will take me 1 second.
AI.
I mean, yeah, AI and so I want to pull up. I'm going to change this color to something more readable. I'm going to make this a blue. All right. So I want to pull up. This is the beginning of the year. I'm going to take us back to. This is the returns on this like magenta line is MGK. That is the biggest stocks. I'm just going to widen this so it's just that. That is the biggest stocks in the S&P 500. It's like 90 names, but it's like 70% Mag 7. The blue is the triple Q. The green is the S&P, and then down here this gold. I'm going to pick a different color there. Something a little easier to see. Let's go with like a nice bold green. This nice bold green line is the Russell 2000. And I'm going to add on one more index, RSP. This is S&P equal weight. And we'll make this one like a nice orangey color. Orange, you glad I added this? Yes. So and this is where I think really you see. So this is the equal weighted index is the same thing as the S&P 500. It holds the same stocks, but it's not, instead of cap weighted, it equal weights the sectors of the S&P 500. And on the year, the S&P is up 5%, and the equal weight, the one that kind of represents all the stocks in the S&P 500, it's up 0.43%. So, and the reason is that it's been all these mega caps driving us higher. So my thoughts, one of two things has to happen. I want what do you think is going to happen? Right? We're going to have mean reversion. We will. It always ends up happening at some point, especially within the S&P 500. So the question is, do the mega caps drop to the rest of the market, or is the rest of the market run to the mega caps? Alicia, what's your take?
Look at my RSP chart, and just I would say my charts are showing 5200s our next stop. So I'm saying and this is a consolidation, trying to ready to bust through this resistance here. I would say that we're going to go higher, and we're going to follow the RSP is going to catch up.
Your lips to God's ears. So folks, just all full disclosure, I have most of, when I'm helping my older sister with some investing, I always put her in RSP instead of SPY. I like the diversification better. It's got it, and it's it generally has lower volatility. Generally, not as of late. But I'm with you. I think that at this point we busted through 5,000. At some point the Band-Aid will rip off, and I think this could end violently. But trying to wait for that pullback, we could be 5,500 and drop back violently to where we are right now, and you'll have the bears, the bears running laps saying, "Look how great we are." Meanwhile, they've been calling for a sell-off since 4,000.
Yeah.
So Alicia, let's take a look at some of your charts here. Now that we've kind of ran down the economic data, we already looked kind of at SPX. I want your take on Bitcoin and crude.
Oh boy.
Because Bitcoin looks like it might be busting out again.
Last night when I wrote up my write-up, my profits and pumps, I wrote Bitcoin going to 46.5. Mm-hmm. Well, it blew through there. I adjusted it this morning to 48,125, and it looks like we're going to be there before my paper gets, or my newsletter gets sent. Look at that.
It's pretty violent.
It sure is. Well, also the BlackRock ETF and the Fidelity Bitcoin ETF have both made it into the top 10 as far as inflows this week.
Mhm.
So I think it was over this week, or maybe it was January. That's what it was, January.
Yeah.
They were number 5 and number 8 on total ETF money coming in. So people
Yeah, I
want
mean,
Bitcoin.
FBTC, the Fidelity Bitcoin Trust, it's been averaging about 8 million shares of 8 million shares a day. That's not small. It is there a few of the other, there are a lot of them. Believe it or not, one of the reasons why SPY is so successful is that there's really only one SPY ETF,
Yeah.
right? Then there were a bunch of pretenders. Every single house brought out their own Bitcoin ETF at once. So,
Yep.
like for instance, so that Fidelity one's probably the biggest, one of the biggest ones. That and the BlackRock one, but like ARK has theirs. That's doing 2 million a day. Franklin Templeton has one. Invesco has one. There is a Bitcoin ETF across all of these. If you probably took the aggregate of all of them that listed at once and took those inflows, it would probably have been, I don't know if it would have been top 1, but I bet you it would have been within the top 3 collectively. Probably number 1 though. So yeah, Bitcoin looks like it's taken off. It kind of shook off that initial sell the news. The next piece is options. And I'm hearing those will list in March. That is what I'm hearing. They're not official. They need to get approved by the SEC. So that can happen whenever. But the little birds tell me March.
Yeah.
And that will also lead to more excitement, I would imagine.
Sure will.
Now, the other one I want to ask you about, and this is part of the reason why RSP has been so terrible, oil. Everyone thinks it's going to break out. Everyone's waiting for it to break out. Doesn't seem to want to break out.
Crude, it can't, it's its own word. Well, tried to bust out here, had a bearish engulfing and collapsed over rumors of a ceasefire, but that never happened or never was, but it didn't care. It just kept selling off anyway. He had a nice doji down, traded almost quite to the support level that it's visited a few times here. And then it's rallied off that doji. Now we're testing this resistance level. Hard to say. Hard to say. I've been burnt and crude being bullish, so
pun intended.
Yeah.
All right. So, I still think there's upside here. I mean, either the economy is great and crude's got to go higher, or it's going to sit here and languish, and the economy isn't as good as everyone seems to think.
Or the numbers are fudged, right?
Or the numbers are fudged, and we're in tinfoil hats, or a little bit of both.
You trust everything our government does?
No.
I mean,
you should always have a doubtful ear. A healthy skepticism.
And that goes for all parties. I'm not saying one party is any better than the other. They're all
I agree.
groups.
Yes.
So sorry. Back to the markets.
And let's ask our friend Andrew Giovinazzi, the president and COO of OptionPit.com, to join us.
Real quick, one last thing on crude. Our MACD is turning positive.
Oh, yay!
So you do have that.
That's good.
That is good.
Hi, Andrew.
Good morning, Andrew.
How you doing, Alicia? Hey, Mark. How you doing?
All right. So I wanted to hit off on some earnings. We do have some earnings hitting this morning. Cloudflare is up to and some of these earnings breakouts this cycle have been insane. I'm going to ask you about it, but we've got another one. Cloudflare net, it's up 25% right now, net. All right, so just a massive move there. Pins, who reported this morning, down almost 10%. Expedia, It's down 16%. And the biggest name that reported this morning is Pepsi. And it looks like it is up about 85 cents. So nobody cares about the biggest name, but Net, Pins, and Expedia all seeing some wild moves in what has been some wild moves this earnings season. Does this earnings season feel like the moves have been excessively violent so far?
Yes.
Yeah, especially on like the AI, anything related AI, cloud, AI in the cloud. I mean,
Yeah.
you just
It's-
keep throwing all the magic stuff together and it gets, you know, I have to say, it just reminds me of like the late 90s. It's the same. The market is trading on the promise of all of the stuff that is going to happen. And there are for sure some companies like NVIDIA right now that are definitely, they're making as much money. I mean, they're basically selling all the chips they could sell at this point, right? So there is definitely money there. But and then the market just piles into the however many names there are that drives it up.
And it's built heavily on hopes and dreams. So let's talk about ARM Holdings. They absolutely blew the doors off of the waters. Now, you and I have talked about, or the three of us have talked about these valuations, right? NVIDIA has a valuation, a PE, price earnings ratio, in the 80s. AMD's is into the hundreds. ARM now has a price earnings ratio. RM. I want ARM. Now has it doesn't have a full year, trailing 12 months, but the forward PE is more than double that of an NVIDIA on a chip on a licenser. Pretty interesting. They don't even do anything. They develop the license for IP, and they are valuing it more than double double the forward earnings multiple of NVIDIA. The AI thing has been absolutely, crazy. AMD, ARM, NVIDIA. Are there any other big chip names that you think are?
SMCI.
Which one?
SMCI.
Oh, SMCI. That's the other
That
one.
stock is a monster.
So
We got to put together. We got to put together the option pit super semiconductor index, the OPSSI.
But also look at the float of these stocks that are really screaming, right? The float on ARM is 96 million shares with 2 billion outstanding. And who owns all of it? SoftBank, right? So SoftBank's going to put in a huge SMCI float, super minimum float. You remember when they, the play
got
in
55
the
million
2000s
shares.
was
It's only got 47 million shares afloat.
It's nothing, right? So in the old days, well, again, when I was a young trader, Wall Street would just list the float on all the tech stocks were small, creating, it creates a squeeze. So the violence, what you were talking about, a lot of them are on these really squeezy stocks. I mean, NVIDIA, obviously, it's up $200 this year. So, but it's kind of the same problem, right? There's only how many chip companies right now are making AI chips directly. It's like, okay, there's
not as many as there's
maybe
going
3.
to be in a couple of years.
And that will definitely change in a couple of years. But how high they go in the short term, I mean, we know at this point you don't get right in front of a moving freight train.
Yeah, that's an interesting thing. How many people listening understand what Andrew means by squeeziness and float? Float is the total. There's shares outstanding, then there's tradable shares. Float is the tradable shares. And squeeze. Andrew, maybe next week we'll have you come on and kind of talk about what creates a squeeze. I think that might be an interesting spot for your vehicle to drive through.
Yeah, we could do I could do a little squeeze analysis. A squeeze analysis, sure.
Exactly.
But that's as you look at it, and then you look at which will bring us to some other names, but if the AI, makes robots and robots makes human beings' life easier, how many robots do you sell? I'll bet you sell a lot more robots than cars, right? So
yeah.
Okay, what is the total available market for TAM? So like this is all the stuff that you're starting to hear, right? Like the internet is infinite. Remember, Alicia. So there is like the market trades on hopes and dreams basically and promises. And then when the promises look terrible, everybody just gets out because everything's terrible and the sentiment is bad again. But right now I think it's narrowly focused in tech. It's not in oil. I think the broader market, like the Russell, is basically unchanged for a year.
Yeah.
So I mean, which those stocks are dealing with, I think, more of the structural economic problems like higher interest rates. There's a lot of small banking issues. Those don't seem to be going away. So it's like a tale of two stock markets almost, or there's like a sliver of a stock market, and then there's what I would call the main, separating Main Street from tech, basically.
Yeah.
Tech is still
there,
still rolling.
SMCI is up since January 1st or 3rd, $425.
Oh my science.
Is that insane?
Oh my science.
Yeah.
That is pretty bananas. Speaking of insane moves, I want your thoughts on this one, Leisha and Andrew. So Disney reported good earnings, had a really nice pop. It's back to above one, it was above 110. It's down a little bit pre-market, but the big news that really drove it was this sports portal, right? They're working with Fox, they're working with Warner Brothers to create kind of a sports centric streaming service, something that actually makes some sense to me. So if all I do on TV is watch sports, maybe this would be like something I would want, right? So and it's got the NFL and the NBA and the Major League Baseball all up in arms, apparently. Not arm holdings, but they're all up in arms. But that was what drove Disney. I don't know if you saw WBD. I was surprised it didn't get as big of a rally as it did. But that was kind of the piece that I thought was my biggest takeaway out of those earnings.
So what do you want us to say? It could be interesting. Sure.
Well, I want Leisha to tell me what, Disney had been, it was down at 80. It's kind of recovered. It's back at some old levels. What are the charts saying on Disney? That's yes.
119.5. It looks like there'll be some resistance. But generally, when you get this breakaway gap, as long as you have several days confirming that it's going to stay this high and it doesn't close the gap right away, as long as it trades up here, it's probably going to consolidate a tad and then trade higher. Unless they say AI, and then it'll take off.
Absolutely. All right. So now, Leisha, let's circle back with some of the trades that we were talking about last week. Over the last couple of weeks, I have thrown out a couple of different names. General Electric has been one of the ones that I think all of us like. But, this is one that I've been riding along. And, really, look at the move this thing has made since November. If not for a name like SMCI or ARM or NVIDIA, this would be the talk of the town. Since
sure
November
would.
1st, it's gone from 105 to 140.
Right. I do have it coming up on the far end of the pitchfork here, so you may get a little resistance up here, 141.5, 141.60.
All right,
But
so
that may
I
not
may
stop it.
unwind my lungs.
Well, now watch and see what it does there first.
And on the AI train, the other one I like is Qualcomm. I think that is, it had good earnings, but dipped on it, bounced off the 50, and I think it's heading higher as well. I like this one I think over the long term it's going to $200. I still like this as maybe one of my favorite tech names.
Yeah, you still held your uptrend here with that little dip.
Plus,
And
it is a chip stock.
It is a chip
there
stock.
you go. I have 165. So yeah, there'll be some resistance at this previous high around 158. But the chart, yes, definitely looks bullish.
And now here's one that, this goes along your thesis about if it gaps and stays higher, it's probably going to keep going. I think I am buying calls in Ford. I will disclose a trade that I am long. This is one we did in Delta Strike. We bought the April 13 calls. I think they were 55 cents. I like Ford to potentially, now that it's gotten this kind of finally broken out, it would rally and then earnings would just clip it. It was rallying and then it had good earnings and they didn't clip it. They actually rallied it. This is the kind of the trend I've been looking for out of this company. I like it back to, maybe 14, 15 before it maybe consolidates. What are your thoughts?
I do have a resistance level right here at yesterday. What was that? Wednesday's highs. So you are coming up against some resistance here to try to break through that. But from there, looks like 13 3/4 and then 15.30.
There you go. I know what I'm aiming for. All right, Leisha, you last week you were looking at Mara, Delta, and Boeing, and you've got a couple of new ones this week as well.
Right. Mara finally did what I said it was going to do. Finally, after wallowing and pulling back, it has gone on a tear. It's up another 2.5 today. Delta and Boeing Delta cannot get out of its way. Still in a consolidation phase right here. I still think it's ready to take another leg higher, although your MACD is positive. It has been, but still hasn't taken that punched higher yet. See that resistance?
Mm-hmm.
Boeing, kind of the same idea. Same idea. Still consolidating, still trying to get a leg up over that resistance. MACD is positive in Boeing.
All right.
So now, one of these days,
here's the one that I was interested in that you were looking at, which was Tesla, because that's been talk about hated. I mean, literally, like they're people publish. Let's take Tesla out of the Mag 7 because the performance. It's really interesting. It's just a name made up for 7 stocks. It was just like when it was FANG, right? Netflix never really belonged in FANG, right? It had nothing to do with any of those names. But Tesla's been really hated, and now you're looking at it. So I'm interested to see your take.
Well, it had the gap lower, had traded down below there. Then you had a really nice bullish engulfing candle here on Tuesday. But along with that, you have, so MACD's turning positive today. You have a divergence in the RSI. See the RSI here on this low is lower than this low. So the RSI is ticking high, has higher lows while the stock has lower lows. So that's an
Mhm.
RSI divergence. That's another bullish signal. So you have two bullish signals. I think once it passes through here, 190, no, sorry. I think it's going to trade 196. This will be the next resistance, the top of the gap here, and this low. So the next resistance is coming 196. I think it'll trade there. And then I think it's going to climb and try to close that gap to 206, 207. So
All
yeah, I'm
right.
bullish Tesla.
All right. And did you have any other ones, or are we ready to
Well, I had BITO, but I literally wrote it up at 4 o'clock yesterday.
no, and it took off.
Already made the move.
That's right.
It's insane. I was looking at BITO calls.
Nice. I like it. Speaking of things that move. Yeah, BITO.
Andrew's
definitely.
vehicle.
Yeah, speaking of things
On
that
the
move and
move.
Teslas, it's time for Alicia and I to go grab some coffee and relax while we sit in the back of our and ride along with Andrew in Andrew's trading vehicle.
We need a little car to run across the screen.
Yeah,
or something.
we got it. We'll work with Tradier to get a cool graphic for Andrew's
Well,
trading vehicle.
there's a
next
slight
time.
spoiler here. I'm glad Leisha likes Tesla to go higher. That's my little spoiler. But Max, we could put up the first slide. So this was my little nuclear stock SMR from last week. I'm probably down a little from the show. It's up a little from where I bought it, but still own the shares and I'm not getting rid of it. Also, we had a 3M strangle. 3M has just been dead. I'm dumping the puts today. The puts are up a little money, and then I'll see if I get anything out of the calls. That will probably be another repair segment at some point. Of course, the ARM calls I had a couple of weeks ago probably would have been worth about $50. Just the timing was not great. Now, though, for this week, I think Leisha and I were on the same. We were on the same wavelength. I think Tesla is right now. If we could do the next slide, Max. So I'm acquiring shares here just to let people know. I'm also looking for a move back into the summertime. So the trading vehicle is, do I buy calls or do I find another way? Because calls in Tesla, when it's rallying and it's in trend, you could see it can trend very strongly, but it also can kind of sit and go nowhere for a while. So I'm trying to decide if I want to buy a call or some other, what I would call low theta trade. So just a low theta trade, basically, if you buy a call, it's basically, I need the stock to move now. I need it to move higher. And because once the stock stops moving, your calls start to evaporate. So with Tesla, I think because the sentiment is bad, but I kind of want to get in now when the sentiment is bad and timing can be difficult. I'm going to pick a June timeframe for my options, but I don't want to spend like $20 on a call. So if we go to the next slide. So when I'm trying to decide a call or a call butterfly, and Mark will be launching something pretty soon, trading flies in some of these stocks. But the idea is I want the eventual delta with less money. So if you see here kind of the P&L of this, if I buy a call butterfly and I have this structured relative to kind of the straddle, I think in June's around 40 or $50. So my fly is at least $30 wide. So I like setting up my flies that are as wide, somewhere around there, as the straddle for the term I'm looking for. What it does is it provides you with a fly that could generate decent money if you get the move at some point. So right now you can see there, it's going to take a while for the fly to get to the peak, obviously. And I set up, this one is 210, 240, 270. And the cost is about $3.50. So that's part of the interesting avenue there is I'm not looking for, I assume it will go up at some point. I don't know when, but the decay on my fly daily is for Tesla would be, at least for right now, is positive 46 cents. So with the upside sloping skew, meaning the upside calls are more expensive, flies, you don't have the decay problem. So it's just a question of the velocity of the stock, how fast it's going to move. So if we do one more slide, Max, and I'll just wrap it up here because I know we're running out of time. So what this is giving you the what I call the Greek profile of your trade. So right now, one lot is 6 deltas only. So that is basically 6 shares of stock. However, if we trade over 210 into 220, 230, this $300 could be worth, or this 3 deltas could be 50 deltas. And I'm looking for my $300 to potentially be worth, $1,500, something like along those lines. So if we keep rallying and slowly rally sort of into June, where the value of the trade can really jump. In the short term, if we get a hard rally, the trade doubles. So again, because of the timing thing with Tesla and the sentiment, I do think it will participate in the AI rally, mostly because they're doing robots and all kinds of stuff. And we'll see. Again, it's spec, but I like it as a fly for the long term, and then we'll just see what happens. From a management point of view, and the second part is you can also buy multiple flies. So I'll buy like 5 or 10. And then, if the stock gets a little iffy, if it starts to drop a little bit, I just hedge with a put in the short term. So it gives you the ability to kind of stack, right? So I can spend $1,500, but potentially get, a 10 lot long exposure at 210. And, can make some decent dough if things go our way. So in this particular case, I'm going to use a fly because of the low decay. And, we let it run and see what happens. If Tesla pulls back a little bit, I'll buy a put and just manage the trade that way. But I want to try to stay in until June and sort of watch it go up. And that is my vehicle for today.
Well, thank you for the lift. I appreciate it.
You're quite
Great
welcome.
ride. So nothing like a ride in Andrew's Tesla. It's a beautiful thing. It's a Model XYZ. All right. So let's just update on futures, and then we'll let Andrew percolate, and Alicia and I want Alicia just actually, Andrew, stick around here because I want to show you a trend I've been seeing in order flow. It's really interesting. S&P futures are up 12. So we're off about 20 points from the high. We topped out at 50.43, just a massive pop on that CPI. But my take is that at least the first hour, I would not be surprised to see some aggressive buying today so far. And which lead and on the back of tech. And I want to talk to you guys about a trend I've been seeing in the options. These tech names are all really expensive and really frothy, but you can't afford to not be in them if you're a money manager. So what do if you're worried that the floor is going to fall out, but you also need to be involved in this? And I want to show you what I'm seeing in names like Meta and in NVIDIA and in Microsoft, and now in Taiwan Semiconductor. So let's take a look at my screen here. I want to check this out. So what you're looking at is a close and roll. In December, a trader bought, when TSM was at its lows, Taiwan Semiconductor, a trader bought these 100 calls. They were kind of at the money-ish. I think they paid about $12. They bought 36,000 of them. They sold them at $33.50 on Thursday. Now, what they did was interesting. They took 75% of the credit. So they put some money in their pocket, but they took 75% of the credit. They levered up to almost 50,000 of the 120 calls. Now, these are still in the money, so they're heavy delta.
Yeah.
So what they're doing is basically, instead of going out and buying the stock, they are using options as a proxy, giving themselves a floor on these names, but as they rally, they're levering up a little bit. And we're seeing the same thing in Meta. Meta yesterday, traders are now long the June 2026 750 call and the January 2026 900 call. That is where we
Wow.
are with Meta. And so we're seeing the option markets with how thick they are now, with how much liquidity there is there. And with this lack of float, I can actually go into the options and move the stock less than trying to actually accumulate a bunch of shares. And so this is a strategy that actually it's applicable to your normal retail trader. If I want to be long and I don't want to think about it, but I don't have, 100 shares of Taiwan Semiconductor at $134 is what? Close to 15,000 bucks.
$13,000. Yep.
Yeah. So, how on a $100,000 portfolio, which is a reasonably sized portfolio, right? I buy 100 shares of TSM. I buy 100 shares of Apple. I buy 50 shares of NVIDIA. I buy 50 shares of Microsoft. I buy 50 shares of Meta. And there goes my $100,000.
Yeah.
Or I can use options and get diversified in a much better way. In this case, if I bought 2 of these TSM calls, I'm spending $3,200 and I'm long through May. So we're seeing more and more of this replacement in option markets where people are in money managers aren't buying the stock anymore. They're going in, they're using deep in the money or in the money options to replicate. And then as they rally, they're levering.
It's a bull market.
Makes sense.
I'm just, that's people want to stay long. That's an important thing. When they're doing stuff like that, they're seeing more. So staying long is staying long.
All right. Well, we're running up against it. S&P futures are up about 11. NASDAQ futures are up 60. Russell 2000 futures are up about 12. We're going to open above 5,000. Where do you see markets going today, Andrew and Leisha? And then I'll give you my thoughts.
Me just probably, higher until the CPI number. And then if that number turns out to be benign again, but of course, who knows, but then we're going to keep going because I don't see, at least until the news narrative changes somehow. The only thing there is some politics going on. There's Supreme Court waiting for news on that. There was some, and next week we'll also talk about like the VIX curve with the election future. So like volatility does reflect some, let's just call them political events sometimes. So we could see some of that happen in next week, but it looks like after the news yesterday that things were the status quo will be maintained, and status quo being maintained generally means we go up. That's right now.
All right. Leisha?
We had a lot of consolidation the last 2 days as we've been watching, right? Yesterday it was awful. And the day before.
Awful.
So maybe today we get that pop. I think maybe we could see ourselves up 40 or 50 today, maybe.
All right.
I like it.
I think we're gonna open up. I think we're gonna see a dip back below 5,000 and then rip today. All right. Closing S&P 500 close 5,034.28. That's my guess. All right, folks. Thank you for joining us today. It's been Andrew. Thanks for coming on.
Sure.
As usual, thank you for taking us along in your vehicle. Alicia, thank you for giving us those levels on the charts. We're looking for 5,200 in the S&P. So for Andrew, the Oracle of Options, Andrew Giovinazzi, and Alicia J. Leslie, the Queen of the Candles, the Duchess of Doge. I am Mark Sebastian, your only option. This was Option Pit Live. Thank you, Tradier.